Cooling US price pressures lift hopes for another bumper rate cut. Welcome to Market Insight. I'm David Pollard. US data today underscores the narrative that price pressures are cooling, raising expectations that the Federal Reserve's next move might be another outsized interest rate cut. This in a week where Treasury yields had actually been rising beforehand on data suggesting a still robust labour market might hinder that rate cut, and where on Wall Street share markets, investor interest in chip stocks has been on the rise too. Well, joining me now is Peter Andersen of Andersen Capital Management. Welcome, Peter. Many thanks for joining us today. So today's PCE price index points to moderate price pressures only, but does it tell the whole story as far as the Fed is concerned when labour market data surprised to the upside?
Well, David, I don't know if we ever get as investors the full story on the Fed anytime because there are so many different data points that investors use. Certainly, this is a major data point that they have publicly said they look at, and they would like this to get down to 2%. So 2.2% is close, but it's not actually there. So they like to declare victory if the steady state solution, so to speak, would be a 2% growth rate. So it is helpful, but it certainly isn't all of the story. And of course, there's been more talk about how independent the Fed actually is in this hotly contested political circle that we're in right now.
When this easing cycle is concluded, where do you think we'll be with rates? The Fed's own projections last week suggest around 2.9% as the stopping point by the end of next year, but individual projections amongst policymakers were spread across a range of around 2.4% to as much as 3.9%.
Yes, and that doesn't surprise me because I think what you're referring to is what they call the dot plot, which they poll all their board members to get a sense of where they think rates will be in the future. And what's interesting about that is if you look at the historical track record of that dot plot, it turns out to be no better than a random flip of a coin toss. So while it's important to get a sense of what they're currently thinking, I never use it as a somewhat predictor of what decisions they're actually going to make. It is a vastly unreliable forecaster, but yet that's, as you said at the beginning, all the data points that we use, that is unfortunately a data point that investors use, but I would caution against putting too much credibility in that data point.
Treasury yields eased today on the PCE price index, but we did see a marked steepening in the curve between the 2 and 10 years earlier in this week, to in fact its steepest in over 2 years. Is that the possible harbinger of reflation when the easing cycle does come to an end?
We have spent a lot of time fretting and worrying over the orientation of the yield curve. You remember when the yield curve was inverted, we spent tons of time gnashing our teeth about, does this portend a depression, a recession? Now that the curve is somewhat getting what I would call a normal orientation, I would say that that is smooth sailing ahead, because normally that's what we like, is a yield curve that increases over time in yield. So I'm not at all concerned. In fact, I'm somewhat relieved that that orientation has come back to what we normally expect in a stable economy.
So let's turn to stocks, where the big story has been Micron's huge surge of around 15% or so after the company gave some very upbeat revenue forecasts on demand for AI memory chips. Now, I know you have been a bit of a skeptic on some aspects of the excitement around AI. Are you now a believer?
It would take a lot of sales and a lot of scientists working overtime to convince me that we have this secret solution to artificial intelligence. I'm so disappointed that the word intelligence actually is in that phrase, David, because we are far, far from creating beings like ourselves. So that's on the table for us. I've always thought that. But secondly, I do still worry that we have gotten so enthusiastic about the prospects of artificial intelligence that we have gotten caught up and not paying attention at all to if the companies are actually benefiting from all the money they're spending on this so-called AI build-out. So far, we're not seeing a lot of demonstrated progress and of course, contribution to the bottom line in terms of net income. So I'm not an enthusiast. I was at first, but I do think that enthusiasm will wane before the end of this year, and especially if any of the CEOs of the Mag 7 come out and say, we're rethinking our orientation for spending and investing in artificial intelligence, that would really turn the market totally around. So that is right on the brink, in my opinion.
And how does that thinking of yours feed through into what you might expect in the next earnings season, which is coming up quite quickly on the horizon? We might see a fifth straight quarter of earnings growth, and we've spoken about Micron, but Costco today missed on revenue estimates. What can we extrapolate from all that in terms of what we might see in the next few weeks?
You know, this is what makes investing such a fascinating field. I mean, certainly we like to make profits on that, but the fact that we have a mix of data points like that, some companies doing extremely well, some other, as you referenced, not doing so well, leads us to this uncertainty going into the end of the year. I will tell you this, I think the technology, even though I'm telling you artificial intelligence might has seen better days, I think we will still end positively in that because people have not caught on. I don't mean to sound arrogant, but a lot of investors have not shared my view that we have peaked in artificial intelligence. I think technology, and in terms of the retail investor, there will be a mixed figures in terms of their outcome. But overall, I'm positive on the market, and I think the S&P will end higher the end of this year than it is today.
Okay, Peter Andersen, CIO of Andersen Capital Management, many thanks for sharing your thoughts with us today. That is Market Insight. We have more videos on Reuters.com.